Well, it's a good morning and welcome from me, and it's a good morning and welcome from him. But it's me and it's him. It's the same person in the day, just mucking you about. That was a famous clip from a TV show back in the 70s, 80s. Two Ronnies, I think it was. Showing my age, I suppose. Enough of that. Hope everybody's well. Hope you're well. Because, you know, we got an extra hour. Well, we lost an hour in bed, didn't we, over the weekend? But we got an extra hour of sunshine and daylight and all those lovely things. And of course, lockdown is easing off in this country now, which is great news. I think we got this vaccine right. And anyway, we'll see what goes on, shall we? But more importantly, let's talk mortgages. Let's get into the topic of mortgages and financial services and all those good things. Now, I'm getting a few people now on YouTube, especially, asking me questions and asking me to produce videos on this topic or that topic. And I love all that, because that's telling me that it's all very relevant and, you know, we're up to date, because that's the real benefit of our YouTube channel. I call it ours because it's you and me. I can come straight to you now. There's no middleman anymore. I don't have to rock up into any fancy training room or any fancy broadcast studio or whatever it needs to be. I can go straight to you with information that's up to date on the button. And I think that's really important to do so. I've got a bit of a hair in my eye there, just to show you it's live, isn't it? Here, let's get rid of that. So, what's the topic that people have asked about? Well, it's about fact finding and mortgages. So we're going to go straight into that particular topic for you right now. Here we go. Hi, welcome. Because, you know, we do kind of like little clips as well. We kind of cut them up, put them on HD, put them on our boot camp. So I kind of like top and tail them. Welcome to a short clip for you on a topic that you might think is dead easy, really. And a lot of people think it is, but it's not. And I'm calling this one How to Advise Mortgages. How to advise mortgages. Now, you might think, well, hold on, Paul, isn't that what the job's about? Isn't that what it's all about, how to advise on mortgages? And it is, effectively. And a lot of people, they think it's easy. They do their exams, their CMAP, which, by the way, doesn't really prepare you for mortgage advice, if I'm honest with you. Does it? Well, not the specialist mortgage market anyway. So how do you advise mortgages? So let's talk about this now. Let's get into why it's not easy, but it can be easy if we structure it a bit more. And we're talking here about fact finding. We're talking here about exploring client needs so that they know exactly what kind of mortgage they want. Because at the end of the day, your job as a mortgage advisor is to give advice on a mortgage. You need to advise the right mortgage. That's it. It's what you're paid to do. But it's not just the mortgage. There's many other things going on as well. Now, the key concept here is that we must coach nowadays. We cannot tell the customer what to do in a vigorous, authoritative way. You can if you want to, but people, younger generation, older generation, don't work kindly to that kind of interrogation or dictatorial attitudes. They want to be coached. So I want you to think about being a coach now, a financial mortgage coach. You can call yourself a coach if you want to, but the customer might be a bit confused because they're probably thinking of advisors. So coaching is not telling. Coaching is asking questions. Coaching is drawing it out from the customer what they need, so you can then recommend the right product. It's simple as that, really. You go to a restaurant, if you're allowed to one day, and the waiter comes over, and if he or she is good, they will ask you questions in order to find out what it is you're wanting, and then they make recommendations. It's exactly what you do. Now, the other thing to think about when exploring for the mortgage fact find, call it what you like, is, yeah, you got a lot of compliance, and many of you have got systems, you've got like fact finds on the screen with question after question after question, which you've got to follow in that order. And your compliance people will wrap themselves around it and make sure it's all compliant and correct. Because if you get it wrong, you could be sued for hundreds of thousands of pounds. You don't want that. So, but you've got to have a conversation. You've got to have a decent experience for the client. I remember working for a lender 4 or 5 years ago now when MMR came in, and they were doing 3-hour long meetings. 3 hours long they were doing their meetings for. And I was watching these, like, I was observing these things, giving coaching, and I was watching these poor clients. After about 45 minutes, they just died. Not right, not on. It's just ridiculous. So make it an enjoyable experience by asking questions, having a conversation around the needs that the customer has. Don't make it an interrogation, question, answer, question, answer. You don't want to do that. You just don't want to do that. It's not fair, is it? It's just unethical. It's rude. No, ask questions, become a coach. Remember the adage we've talked about before, whole part whole, which is my sort of
methodology here, whole, part, whole. And what we're talking about there is when you are giving mortgage advice, talk about the whole service. Talk about the full service package that you're going to be doing for the client. Talk about it right at the moment one, the way you operate, the way you work, how you help your clients. You're looking at a full service package that allows the customer to buy the house with an appropriate mortgage loan that's fully protected and looked after. So if anything happens to them during the whole term, the house is the mortgage is paid, the house is rebuilt in the event of burning, all sorts of issues. That perils that throw at you, you will protect them for that, and you make sure they get the right mortgage that suits them, so it adapts to their lifestyle as they move forward. That's the full service package. Talk about it all. Don't talk about the parts. You can when you recommend stuff later, but don't talk about the parts, because it's not a part, it's a service package that you're giving. This is much more than just small things like a mortgage and a fixed rate, stuff like that. So that's the key concept. So don't bolt on is the method. Don't bolt. Here, let's put that one down there for you. Don't bolt on products. You know, if you refer for wills or lasting powers of attorney, which you should do, of course you should, don't bolt it on at the end. Oh, I've forgotten to add this, or oh, great, you got your mortgage, that'd be great. Okay, well, let's now talk about protection, shall we? The client's not going to go there. It just isn't the way. It's not the way it works. So yeah, whole, part, whole. We're happy with that. So we then have a conversation, and you ask questions in a nice, easygoing way with open questions, with conversational patterns, with good tone of voice. I talk about all that in my other videos. So have a good conversation around a number of topic areas to build up the mortgage need. And what you need to do is to ask questions about specific need areas the client's got. Clients call it various things, but you've got to work on these need areas. Find out what their issues and thoughts, problems, goals, desires are around these need areas. Make a note, and then when you recommend the mortgage later, you can recommend the right one. And when you do your suitability letter, it's the right suitability letter. It's correct. Yeah, that's what you want to do. And it's easy to understand, and it's tailored to the client. That's really where you go. So what sort of things do you talk about? Well, you first of all, let's just write these up over here. Sorry. You want to talk about risk, of course you do. You want to talk about the customer's risk attitude when it comes to a mortgage. Are they cautious? Are they adventurous? This kind of steers towards interest only or repayment mortgage, but most people will want to have the mortgage fully repaid. Don't suggest it, ask them what they want to do. They might be interested in interest only mortgage, you don't know. So what's their attitude around taking a bit of a risk with paying off that loan? And most people don't really want to take a risk, do they? Let's get two different pens going here. Have a little conversation around this topic here, your forever home, as we call it, or Kirsty and Phil call it, don't they, in their programs on the telly? Your forever home. Is it their forever home? What's their future plans around their mortgage? So what's their future look like around their house purchase, their future plans? What are they going to do in the future? Are they going to move around the UK? Are they going to move abroad? Or are they going to stay in this house for 20 million years? You know, find out about that. You can do a lifeline. I've talked about that in previous videos. You can find out where they're going to go in 5 years, 10 years time. People probably don't know, but they might have an idea. So find out about future homes, future ownership, where they're going to be living for a long while. Really important, that one, isn't it? Find out a little bit more about payments, payment thoughts. Mortgages, of course, are paid monthly, but will they be wanting to maybe put in some lump sums into their mortgage at some point in the future? Will they come across some money? Have they got inheritance coming up, possibly? Do they have bonuses from work payable lump sums? Are they self-employed and they get a large amount of money for some reason? Are they going to want to pay off lump sums on that mortgage as an option? Is that something they're going to be thinking about? That's something to think about. Payment stability comes into its own. Let's put that one over here, Sherry. Payment stability. Are they looking for the payments to stay the same? How do they feel about interest rates going up or going down? Do they worry about budgeting on a regular basis? Do they want stability of payments? Don't say, do you want stability of payments? Yes, please. You know, don't go there. That's just, a computer can do that. You're a professional. You can ask questions. You're a coach. Find out how do they feel about it. Why do they want stability? What's their thinking about it? What's their rationale? Drill deep into the psyche of the individual, and then you'll find that out as well. While you're on that topic, find out about the impact on them of death, impact of dying, or getting an illness. You know, how's that going to affect them? What do they think about that? How do they feel about that when it comes to the mortgage? Ask it now. Don't wait till later to talk about protection. Ask it immediately. That's the key to that one. Just find out about their views, opinions, fears, goals, dreams, aspirations, concerns about dying and death and having a mortgage over your shoulder, over your head that you can't afford because your partner's died and she isn't earning the money that she was earning before. That's an important one to do as well. Others for you, a bit obvious really, some of these, but find out about their employment. What's their future of employment? Where they're going to be working? Are they looking for self-employment maybe at some point? Find out about their employment current, obviously, but future as well. That comes into the mortgage as well. The status side of their employment. Find out how they're paid. Are they freelancer? Are they an owner-director? Gone are the days where it's just like employed or self-employed and that's it. No, that's old hat now. People have gig workers, freelance workers, owners, directors, limited companies, umbrella companies. Find out a bit more about their paid and the future of their paid as well. That's a key one as well. Find out how long they want the mortgage for. How long do they want to make payments for? How long do they want to keep a mortgage for? And it's not just this mortgage, there's future mortgages as well. People have series of mortgages throughout their lives. Do they want to have a mortgage until they retire? Do they want it earlier? Do they want to get rid of it at some point? What's their views around that one? While you're on that topic, find out a bit more about their retirement plans. When are they looking to retire? What sort of age are they hoping to retire? They may not have any idea at all. You know, if they're 25, for example, retirement might be 70, 75, like 50 years away. That's a lifetime. That's half a lifetime anyway. So, you know, just ask the questions around that one if you want to. Probe a little bit around about other debts that they've got as well. What other debts do they have? Let's sneak that one in there for you. You're going to have to do this anyway on the fact find. It's a hard fact, you know, because it affects their monthly payments and their affordability in debts and things. Of course it does. But what sort of debts do they have? How do they feel about debts? Do they want to get rid of debts? Do they want to maybe consolidate some debts if it's a remortgage? Find out a bit more about that area as well. That's a key one. Attitude to debts as well comes into it. So not actually just debts as well, it's the attitude to having unsecured debts. Difficult one to risk over here. This is for the mortgage. The attitude to debts is, how do they feel about having unsecured debt? I mean, I've had a credit card debt all my working life. Since I'm 19, I've had a credit card balance. Don't worry me, it can be paid. It's no big deal. I'm quite okay with credit, with unsecured credit and loans and overdrafts and stuff like that. You know, as my bank manager says, your overdraft, Mr. Archer, it's not a target, it's a limit. You know, so I'm always okay with it, but some people are not. So ask about that as well. History of debt, of course. Payment history. Find out about what they've done in the past of their debt. Have they been okay with their debt? Have they had any problems? Do they have a coffee stain on their debt report? Find that out now before you go to any kind of debt or sort of credit searching. You have to do anyway. You have to ask them the question, but find out what their attitude is. So these are just examples of the sort of conversations you're going to have. Now, obviously, this information can help you advise the right mortgage. Of course it can. If you get a good indication as to these areas for the client, payment stability, forever home thinking, impact of death, future plans, payments, lump sums and things, the risk attitude, of course, comes into all the kind of risk that they have to debt or having borrowing, you can then recommend a mortgage that suits their needs, and you can do a suitability letter which confirms all of that. As simple as that, really. But here's the last point, really, that you've really got to hammer home, and I'm going to put this in red because it's important, and I'm going to put this over here. You've got to find out why. There you go. Why do they have a risk attitude of cautious? Why do they want to have their mortgages paid off? Why do they want to retire early? Why do they want to have death protected? Why do they want to have payment stability? Why? Don't just take the first answer. Find out why, make a little note on it, even if it's a free field in your fact find, just type it all in, get it all written up. And you can have a really good conversation cycle around this sort of stuff. kind of thing you want to do is, okay, Mr. Brown, what I want to talk about now is payments on your mortgage. You know, a lot of people pay monthly. Some people pay lump sums into their mortgage. There are lots of different ways of doing a mortgage. What are your thoughts around that? You know, keep it nice and open. How do you feel about that is a great question to ask. How does that feel for you? How does that seem to you? What are you picking up on that one, Mr. Brown? Ask the questions, probe away, get their thoughts. Don't lead them. Whatever you do, please don't lead them. I've seen hundreds, thousands of mortgage advisors leading people. It's done by compliance because they want you to have this reason, so they can do a suitability letter and everyone's covered. But you end up leading the client. For example, so let's talk about lump sum payments then, Mr. Brown. Would you like to make monthly contributions, or would you like the flexibility to be able to pay lump sums? Oh, yes, please, I'll have one of those. You know, that's leading. You don't want to do that. Have a nice conversation. Remember, you're a coach. You're a professional. Your competition in the future is tech. It's bots. Computer bots, Alexas, they can all do this thing. They can all ask these questions. Yes, no, yes, no, yes, no, yes, no. That's what they'll do in the future. You are better than that. If you want to survive against the rise of the robots, then you need to get good at this because that's what you're paid to do. I hope that's been useful. Nice little update for you on how to advise mortgages. Such a simple topic, but not when you think about it like that. Bye. Ha! Great. Okay. Yeah, hope that's been useful for you. Nice little exercise there on advising mortgages. Let's see if we can get one more topic squeezed in then before our time comes to an end on this live stream. So let me get this good old wipe down for you. Hope you're well. Hope you had a good weekend. We had a good weekend. Went out for a long walk yesterday. Got myself a new app on my phone. It's an Ordnance Survey Map app that has all the Ordnance Survey maps, proper license one on your phone. Up until now, I've had problems with that because my phones have had batteries which die pretty quickly. And when you start using sat nav on your phone, the battery drains. But this one went on for ages. I've got this new phone, the battery goes on forever. It's really good. So you're looking at your map and it tells you where you are. So gone are the days where I get the compass out and you have to work all this out. Tech, you see, tech drives everything in this sector, isn't it? So that was our weekend. It was jolly good fun too. Let's talk about a little topic for you, which I want to go into. And we'll do that one next week, probably. I might do a few extra videos as well today and just post them onto YouTube anyway, so you can watch them in HD. But we'll see how that goes. Remember to let me know topics that you want to talk about. Let's talk about your personal brand, shall we? Let's talk about your brand. Now, I'm not a marketer. I don't profess to be a marketer. Therefore, I'm not going to talk to you about brand and how to create a brand image and all that kind of kit, because there's better people that will do that than me. But last week, I was talking to a student who came on our boot camp, and we were on video chatting about stuff. And he said to me, I really know you, Paul. I said, how come? We've never met. He said, no, I really know you, Paul. I seem as though I've known you for hundreds of years, he said to me. I said, well, we've never met. He said, it doesn't matter. I've been online and I've seen you. I've watched your videos. I've seen your podcasts. I've seen your YouTubes. I've listened to your podcasts. I've read your books. I've read your blog posts. I know all about you, your history, your past. I know who you are and trust you. Now, that's the point really that I'm making, because when we're talking about a brand here, we're talking about first impressions. We're talking about a personal brand, not a logo or anything like that. We're talking about you as a mortgage advisor having a personal brand. Now, a personal brand is something which you have, which is your reputation. It's your capability. How ethical are you? How professional are you? How knowledgeable are you? These are all elements of a personal brand that you have and you've created over the years. Now, there's two ways of doing or creating a first impression. There's the face-to-face one, when you meet people face-to-face in the flesh, which is what we used to do years ago, isn't it, before lockdown. Now, the problem with that methodology, it takes a long time. When you meet somebody, it takes a while to get to know them and their brand. It just takes time. And of course, it takes time to drip feed who you are and what you're about. But online, it's lightningly fast to create a brand. People make an instant decision about who you are. So how credible are you? What's your intentions? What kind of individual you are? What kind of character? Comes quickly online. And that's the way that we do it nowadays. And that's the way as a mortgage advisor, you're going to do it too. So how do you do it? How do you create an online brand that hits people straight there and keeps that brand going, because you want to create that, don't you? Well, the first thing you want to do, of course, is you want to go home or get your computer out and Google your name. Pretty frightening stuff. Not your company name, don't care about that. That's different kind of branding, isn't it? Companies have brands, of course they do. I'm talking about you personally. What are you about? Just Google your name and see what comes up, because stuff will come up. Now, it's more likely going to be all sorts of social sites going to come up, isn't it? When you Google yourself, you're going to have various social sites coming up, postings, photographs, Facebooks, LinkedIn, Twitter, whatever it is, you will come up. And that's, of course, what customers see, because they will Google you when they have a meeting fixed to go and talk to you, whatever that is, face-to-face or video. They will Google you. And 5 minutes of searching the internet, they will pick up a brand. They'll get your brand. It may not be the one you want, but they'll get a brand on you. They'll find out what you're about. So you've really got to get your online presence nailed. And we're talking about profiles pretty much, aren't we? We're talking about social selling. We're talking about social media. Now, social media is a great thing for mortgage advisors. Social media, if you think about it, it's just where people are. It's just hundreds, thousands of people on computers that you can socialize with. That's all social media is. We get hung up about it, but effectively, as a mortgage advisor, you need to use social media to connect to your customers. It's obvious. You need to find out about them via social media, because that's how people meet nowadays. Yeah, we all do face-to-face, of course we do, but the masses meet by social. And as a salesperson, as a mortgage advisor, you've got to nail the social side of things. You do. Not every single one, because you could waste your time, couldn't you? But you've got to get your profiles right. I'll give you a couple of tips and hints about profiles to help you. Now, all social media sites have profiles, we know that. And you set them up and you go, don't you? All social media sites have profiles. The first thing is you have a photo. Then you have your profile kind of description, who you are, description, summary, whatever you want to call that as well. You have posts, blog sections where you put your posts on there, blog sections. You have comments, so when you start commenting on other people's posts, comments form part of your profile as well. You might have videos and podcasts or whatever it is. You have all sorts of content that you put onto your social media. And it's all of this that people pick up. But these are two things that you can work with. The first one there is your photograph. I'm not a photographer, I'm not an artistic person, but I know a damn good site called photofeeler.com. You might have come across it. I'll put it up there for you. So it's www, photo, as in photograph, photofeeler.com. So anybody listening on my podcast here, it's photofeeler.com. Now what you do is you go on there and you upload your photograph that you use on your social media sites. And it gauges how good it is. That's all. It's got artificial intelligence. It's also got peer review as well. So it's brilliant. I put one up there, and I didn't want to pay them any money because I didn't want to. But people can actually rate you according to how professional you look, how sociable you look, just by your photograph. And that's what people do. They use your photograph. So, upload yours on there and see what people think about it. It's definitely worth doing. Obviously, your profile description, your introduction is important to who you are, particularly if you're talking about professional sites, such as LinkedIn. LinkedIn is a mortgage professional site where you will go on there. You want to put your profile on LinkedIn. But you've got to think carefully about your profile description, who you are, what you do, etc. Even on things like Facebooks, Instagrams and stuff like that, Twitter, you've got to put a proper profile on there. So make sure it represents who you are, your brand, the kind of image you're trying to get across. But that's great. People can make that up, can't they? And whether people believe your interests, I don't really know. But what people do believe, though, are your posts, your blog posts, your comments, your videos. That's where people pick up what you're about. So be careful what you post, be careful how you comment, what you say. Of course, it goes without saying. It goes absolutely without saying. The videos you put on there, the podcasts you put out, comments, that all creates your personal brand. So get your brand right, really. What are you about? You may not know, but crazy that really, everyone knows. And then keep yourself consistent on social. Now remember, Your personal social and your business social, you might think are separate. They're not. They're not. Just definitely not. When your customer Googles you, checks out your social presence, they will look at both your personal profiles and your business profiles. You cannot keep them separate. I'm not saying you should treat LinkedIn like you treat Instagram or vice versa. They have their places, but don't think you can distinguish the two. They all create your brand. Remember, you're a person. Mortgage advisors, unless you're a corporate, and I get that. If you're a self-employed mortgage advisor, mortgage broker, it's a person that picking up the brand for you. And the last point before I clock off on this topic really is that it takes a long time to build up a brand, to get it right. I mean, I've been operating now self-employed for 20 years. So I've been creating my brand over 20 years, and hopefully it's all there now. I don't know whether it's changing or not, but I'm kind of age now where I've got my brand, I've got my image, everything's congruent of who I am. And this is what I'm about, and I'm okay with it. Doesn't take long to lose it, so you can completely muck up here. One little post on there, you could certainly lose your brand. One mistake you make could go viral, couldn't it? You all hear about celebrities that completely mucked up their social presence for some other reason. I don't think we're celebrities, are we? But you know, could still have the same effect. But get it right, because that's your personal brand. So that when your customer has a meeting with you and you arrange the meeting, and then maybe you phone up half an hour before you're due, they say to you, look, I've been online, I know all about you, I've checked you out, I know your brand. That's what you want to aim to do. So there's a nice little update there for you on that topic. See you soon. Bye. Great. Good. You enjoyed that one, did you? I hope everybody's well. I hope you're well. Do keep in touch. Do get onto my social media and connect with me. Love to hear from you. Obviously, subscribe to the YouTube channel. That's the main one that we use a lot of. But do get over to my LinkedIn profile. I use that one a lot, and link in with me, please do. Tell me who you are, or where you found me, because you know that's the right thing to do, isn't it? Whenever you make a connection request. I don't go into my business. You see, is mostly corporates. We have a Facebook business page, and our marketing executive that deals with that side of things. But mine is corporate. I deal with the corporate side mostly. Therefore, my LinkedIn page is my key social media outlet. I don't do Facebook. I don't do Instagram or Twitter, any of those things. I ain't got time. You can't do it all. You can't do it all. You simply can't do it. And somebody once told me, if you can't do it properly, then don't do it. Was the response. Now that makes sense actually, because everyone's doing every single. Friend of mine, he was saying that his missus is having a go about because he keeps going on Clubhouse, which is the latest one, isn't it? Or TikTok or whatever it is. You can do them all, but you've got to do business, haven't you? Enough of that. We're going to clock off now because we've run over up to half an hour on this live stream. Remember, we do these every week. We keep you up to speed. We keep you up to date. I like to talk to you. I like to get close to my customers, because my brand, if you like, is to help you become the very best mortgage advisor you can be to serve customers moving forward and make a good living from this wonderful trade, which is a noble trade. Other than that, we'll see you next week.